Hello, welcome back. So Peloton, a very well-known stock for which I made a video about a month or so ago, maybe a little bit more, dropped massively again today. It's down 17% as I'm making this video. And I wanted to make this in order to explain what happened and whether it's actually a good potential buy right now. Now, when I made the original video that I made about Peloton, I suggested that it's not really a very good buy to add to a portfolio, and I examined why. But we have some new data here, and we want to be taking a fresh look at the company, see if it's worth adding to our portfolio now. Now, what happened is that, as you can see here, the Peloton actually will cut down on some production and is reportedly looking at cutting underperforming business units like the recently launched apparel division, and also probably closing some stores. That's always tough to hear about a company. And you will see here that Peloton is looking to pause production of bikes, treadmills as demand wanes. So actually, they don't have demand, and this potentially will mean that revenue will be going down as well. They won't be able to sell as much, and that's not great. And Peloton insiders sold nearly 500 million in stock before its big drop, a SEC filing so there may be some drama happening pretty soon over here. Now, we want to examine the stock for our sake, see whether it's a potential interesting buy right now or not. So here, Peloton, you'll see it's down 83% in the last year. That's so rough. I hope you're not, or you have never held that stock really. And troubles start when you're looking at a PE that's non-applicable here. That's like a hyphen, because it means that basically the company is not making profit. It's not making earnings. So, because what is PE? It's price to earnings ratio, right? And so when there are no earnings, how can you calculate that? It's in the minus. So we can take a look at the financial analysis tab here and take a look at the income statement of the company, and you will see what I'm talking about. Now, you will notice that the company has had some growth in terms of year-over-year growth supposedly here, and over here you will see that there is some gross profit. But if you take a look at the net income, the actual net income is in the negative, and it's much in the negative really. And taking a look at the balance sheet of the company, the total equity is actually going down now instead of continuing to go up. And the solvency tab displays total debt to equity, which is higher than 100%, so not great. And I'm pretty sure, actually, the Altman's score is still high, but this paints not a great picture actually for the company, especially when 2 years ago it had a 32% total debt to equity. So in a couple of years, the debt of the company has skyrocketed. So that's horrible to see for a company. And I also wanted to examine quickly the outstanding shares over here. So I'm sure they are printing more, and they are. Yeah, they are diluting stockholders in an attempt to be making more money here by selling stock. And this is very steep here, but it's too few stocks to be a reverse split or a split of some sort. So I think they actually sold stock over here to investors. And you may be thinking now, is this a potentially good opportunity to enter the stock now that it's down so much? But not so fast. I mean, because something is down doesn't mean that it's good right now. I mean, cheap in the stock market can get cheaper. Don't think that just because the company is at 26, it cannot go to 6, because it can. It can very easily go to 6, and I wouldn't be surprised based on what I'm seeing here. Look at the cash from operations, that's insane. Like, the company is losing $1 billion when it was actually making money in 2018, for example, or 2020. That's not good. And the free cash flow here, look at this. I mean, companies losing money hand over fist, if you can even say that. So rough, very rough. I really don't like what I'm seeing here, and I'm assuming that the short ratios, so the short interest is actually high. It's not that high as I would expect it to be. I'm pretty sure it will grow higher in the next few days, but right now I can't see myself entering here for any reason really. This looks very not interesting to me, and actually I should definitely add some caution here, because if you enter this stock, again, it's possible that it will go lower. Now, if there is some sort of short squeeze later, or some sort of hype play. Maybe it can go down for a little bit, but that's not a company to buy and hold for a long time for sure. This looks to be going worse and worse over here. So yeah, that's a stock that I just couldn't see myself entering at any point right now, especially with the current news and the fact that they seem to be closing stores and all that. So you're probably gonna notice a steep drop in revenue as well. So company seems to be shrinking than actually increasing its cash flows. So not great. So yeah, if I were holding Peloton, I would actually look to unload some of the stock, and I wouldn't enter here. I mean, I just cannot see it. So hope you enjoyed the video and you learned more about Peloton, get some idea on whether it's a potentially interesting play. Let me know what you think, and if you did like the video, please leave it a like and subscribe. Pretty soon I'm gonna be creating a Discord server where we can actually chat about different investing topics. I will let you know in a separate video, but you may want to subscribe because there's a lot coming to the channel. I'm also creating a piece of software that I'm gonna be giving away for free to people, and this is gonna be a very nice tool for analyzing stocks and companies. Really, I think you will enjoy that. So again, thanks for watching, and I'll see you in the next video. Bye bye.